Eric Muathe with Muathe.com. By now you've had a chance of reviewing my last couple of videos on the single line strategy, and here we're going to take a look at 3 stocks, and these have been stocks of interest, but we're going to use the strategy of identifying one line on the all data monthly chart to identify potential for key turnaround situations. Let's begin here with NHPC. I'm just going to draw a simple line. We've drawn this line before, and as you can see, this line has been a problem every time we tag this line with uniform activity. Here we came close, we make a multi-month, multi-year high, and here over the last couple of attempts to move above this line, stock's been struggling every time it pulls back for a swing trade lower. So that's one line on NHPC that has been relevant and continues to be relevant. The only way this stock sees higher prices, as we can see, is if and when it can finally jump above this blue line. Let's take a look at the next one, and it is Hindustan Copper, and here we just take the tops of the RSI all data monthly. Should be something like that, and you can see as we come here, and it is the second week of March, we are already showing resistance on this monthly chart. We are also moving below 50, suggesting that this might end up being uniform activity rejection A on the line and B when trying to move above the RSI 50 level on the monthly. All told, this line seems to be controlling. It's a single line that gives us here a cue, a visual cue that the next swing trade or maybe the next major direction is down, unless the stock can find a way of moving above that blue line, which has been and continues to be resistance. The last one here that we're going to discuss is India Glycols, and we're going to draw a line connecting these lows here, and it's going to be something like that. This line gave us the break of the highs of 2012. We tried to move above the line here. We were rejected in 2014, and as we begin 2017, this is March 8th, and we can see already it is down about 2 to 3% for the month, and it is being rejected on this one single line that seems to be explaining what is going on. So we can assume here that the next swing trade seems to be pointing down. Also keep in mind that the stock is being rejected when trying to move above 69.1, so that's another reason why it could be stalling and might end up seeing lower prices. So unless the stock can move above this blue line, and unless the stock can hold back above 69.1, chances are the next swing trade is going to be to the downside. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. EACS. Mwah.